Hi, and welcome to Training Shorts by Realty and Insurance U. My name is Sadiq, licensed real estate broker, licensed real estate instructor. And in this video, I want to talk to you about something. You know how sometimes you want to, I'm sorry, not what you want to do, but your customer has a closing scheduled for the beginning of the month. Let's say on the 5th, something like that. And you get a phone call and they ask you, can I skip the mortgage payment? Can I just skip the mortgage payment since we're going to close on the 5th? We can just have it paid there. I mean, what are you going to tell them? Yes, no. I mean, what are you going to tell them? Well, what you need to tell them is exactly what I tell you in this video. Because whenever someone comes to you and talks about skipping mortgage payments, they 9 times out of 10, what their assumptions may not be correct. And let me show you what I'm talking about. If someone comes to you and say, hey, listen, or seller comes to you and say, hey, listen, I want to skip my mortgage payment. And 9 times out of 10, this is what they're thinking. Seller assumption, mortgage payment, let's say it's $1,000 due the 1st of each month. The closing date is on the 5th. So they're thinking to themselves, hey, listen, in only 5 days, we're going to prorate it. So you look at the mortgage payment of $1,000 divided by 30. That's $33.33 per day. Multiply that times 5 days, and the seller's looking to see $166.65. And they say, you know, that's all. Hey, listen, we don't have to make that big old payment, $1,000, and then have them refund us. We'll just skip the payment. And their assumption is that they're going to see it on the closing statement somewhere around $166.65. But the issue is, there is the reality. And this is the mortgage reality. Mortgage payments are made up of principal and interest. But this is the issue I want you to focus on. The principal portion of the payment pays in advance. The interest portion of the payment pays in arrears. So that same payment that a person paid, that one payment, part of it pays in advance, the other part pays in arrears. What is meant by arrears? For example, when a seller makes a payment on the 1st, the principal portion pays for the current month, advance, and the interest portion pays the previous month, arrears. So if a seller skips a payment, then close 5 days later, you will have to go back and include the previous month interest 30 days to add to the 5 days of prorated interest for the current month. So let's make it plain with numbers. This is the seller reality. Mortgage payment $1,000. Let's say the principal portion is $200. The interest portion is $800. The amount the seller will see on the closing statement. Number one, $33.35. That's the principal proration. Remember, $200, 5 days. So we're going to take 200 divided by 30, 67 times 5 days, $33.35. We have that portion there. Then you have to go back to the previous month interest, arrears, and pull all of that interest. That 9 times out of 10, your seller is not aware of this. Because, for an example, if you make a payment on April the 1st, payment, the principal portion is for April. The interest portion of the April 1st payment is for March interest. So if your customer skips the March payment, you have to pull in the interest. I'm sorry, they skip the April payment, you have to pull in the interest from March. So that's an entire amount of $800. Then you get to the point where the 5 days of interest in April, they will prorate that amount as well. So you have $800 divided by 30, 2667, 5 days. Then you're looking at $133.35. You add that. Now you have $967. Total amount the seller will owe if closing on the 5th and payment is skipped. So the seller is expecting to see $166.65, not $967. So you're going to have a problem, you're going to have an argument, and you're going to have a debate. So if they want to skip the payment, make sure your customer understands what that means, and you understand, you explain to them up front so that your closing can go smooth. That on the mortgage payment, the principal portion is paid in advance. The interest portion is paid in arrears. I hope this information was valuable to you. Thank you for participating in Training Shorts by Realty Insurance U. Have an excellent day.